Well, hey guys, welcome back to the Forex Market Preview. My name is Jason Stapleton, and if you don't know what this is, we are going to take a look at the currency markets this week and see if we can't figure out where some of the major moves are going to happen. And I'm actually going to take some time this week and talk to you a little bit about some pattern formations. And I'm going to talk to you specifically about one that we've got showing up on the pound yen. So let's take a look at it right now. Looking at pound yen on the daily chart, and there's a lot of different stuff that we can discuss here in terms of structure and breaks of structure and where that indicates the market is going and yada yada yada. But essentially, what we're looking for in any type of pattern formation is we're looking for a series of events to occur, the outcome of which produces a statistically verifiable and repeatable formation, for lack of a better, that's a very difficult way to say it, but essentially what we're looking at is we're looking for several different things to line up, that when all of those things line up, it produces us something that is statistically proven to occur. So if we get a specific number of retracements and the ratios are correct for those retracements, then we know when that occurs that there's a 70% chance, a 60% chance, an 80% chance that we're going to see the market do something. And once we know what the market is supposed to do and that there's a high probability that it's going to occur, then our only real, all we really need to do is be looking for the pattern itself in order to try and figure out where the best trading opportunities are going to be. So let's take, and I realize some of you guys are really familiar with this and some of you guys are not. So let me just talk a little bit about pattern formations. Pattern formation starts with an anchor leg. So no matter what we're doing, in this case we're going to look at this leg here, basically because we've broken structure here, giving us an impulse leg into a new structure high. So you'll refer to this both as an impulse leg and then also an anchor leg for a pattern. The next thing we get is an initial retracement here, followed by a little rally, boom, to an outside return, lower high, this high being lower than this high. So the first thing we had was we had our anchor leg, then we had a retracement to a higher low, this low higher than this low, then we had an extension, and we get another move towards to try and move higher, and we are halted there at about 84, 89s, putting in a lower high, this high being lower than this high. Now the market is pressing back down, and we have not come back down into structure yet, and we've not violated the previous high, which gives us some questions. What do we do next? And one of the big misconceptions about trading is that people think that you always ought to know what's going to happen next. And the truth of the matter is, the vast majority of the time, you're going to have no idea what the market is going to do next. Someone's going to ask you, hey, where do you think the euro's going? And you can guess at it, but unless you've got some structure or unless you've got some sort of pattern formation that's set up to give you an indication of what's going to happen, you have absolutely no clue what's going to happen. But as I said before, when a series of events occur in a specific order, then we can predict with a high degree of accuracy what the market is going to do next. So let me bring in some retracements here. I'll talk a little bit about Gartley patterns. So I'm going to take a retracement from the swing low to the swing high of the anchor leg here. And as you can see, the market came down into a 618. This just happens to be the first condition that we need to have met in order to have a potential Gartley pattern. The market then rallied from a low here back up to here. And so let me grab my anchor leg again, or let me grab my Fibonacci tool again, and let me draw from the swing low, from here, swing high to swing low. And you guys can see that that came into the 618 as well. So we had a 618 here, followed by another 618. These two 618 retracements give us a setup for a perfect Gartley pattern. The very next thing that needs to happen for the Gartley pattern to complete is we need to see a press down into a 127 extension of this leg of the move. Now what that looks like is this. The market comes down, boom, and we come down, and we come down, and we hit this 127 extension. When we hit that, it creates a little pattern formation, and I'll draw it in for you here. This is a Gartley pattern. Now, when this occurs, historically, we know that there is about a 70% chance that this market will rally to a 382 retracement before it breaks structure below 167.96s, below X, or the start of the anchor leg. So if I look at it like this, I can grab my Fibonacci retracement tool. I can go swing high to swing low, where I believe that the market is going to terminate at the 127 extension. And I can say with a relatively high degree of accuracy, 65, 70%, that the market will rally to the 382 before it violates the lows at X, the lows of the anchor leg. Now you can very quickly, if I'm going to go ahead and do a risk reward on this particular trade, I can grab the line tool here, swing low to swing high, boom, there's my risk. My reward is going to be something like this. And you can see I have about, not quite a 2-to-1 risk to reward profile, but pretty good. That would be the first target that we would shoot for. The secondary target that we would shoot for would be the 618 right up here. So we've got this much potential profit for this much potential risk, giving us a really, really nice risk-reward profile, much better than a 1-to-1. And we know that we're right about 65 or 70% of the time. Now, once you line that up, guys, and once you've created for yourself and you understand and you know the patterns and you know the specific ratios that go along with them, because the ratios are very important. We found this out when we developed our pattern software. It's because we tested a lot of different variations of the ratios, because for years I had been using ratios that I knew produced me a really good outcome, but I didn't know whether or not those particular ratios were the best ones to use or not. And so we used a wide variety to test and to see which ratios would actually perform the very best. And what we found is, without exception, as a matter of fact, the ratios that we used for the Gartley pattern, for the cipher pattern, for butterfly pattern, all for bat patterns, all that stuff was almost dead on accurate in terms of the right ratios to have for the pattern to produce the greatest potential profit. It's a difference between a Gartley pattern having the right ratios is the difference is the difference between having something that is 40% accurate on a Gartley pattern and something that's 70% accurate. So the ratios are very important, but once you know the ratios and once you know the pattern itself and you can look for it, then just it's simply a matter of identifying those trades and trading those trades every single time they happen. And of course, recently we had the Constellation software that we developed, which was our pattern recognition software that actually does that work for you. But the critical point here from a training perspective is just understanding that having a plan, this is what having a plan is. This is what when they talk about having an edge, that's what we're talking about here. We're talking about just having a set of predefined rules that we know over time produces a specific outcome. And then using good risk to reward on our targets versus our stops to ensure that, hey, not only are we right more than half the time, but when we win, we also win more than we lose. And guys, that when you combine those two together, you are almost unstoppable. Right now in the war room, which is in the syndicate that I have, Akil and I are up about 25% in the last 2 months, and that is just doing exactly what I'm telling you to do here. Have a plan. No matter what happens, just continue to trade the plan. You're going to have bad days, you're going to have bad weeks, but you're going to continue to trade the plan. And wouldn't you know it, over time, although you hit drawdowns, although you hit problems, although there's nothing easy about it, you end up making a profit. And so that's what I wanted to cover here today with you guys. Some of the other things that you might pay attention to here, I'll just go to USD Canada. You've got a double top set up here, and it's broken down. If we violate here, if we can violate the lows, that come in right here, we're going to have a decent 26.18 opportunity. And guys, that when I say 26.18, if this is the first video that you're watching, just go and get the training. It's a free training that I did. It's actually in the email that I send you. And if you just Google it in YouTube, you're going to find it, and you guys can watch it. But give it a look over and check it out. But the 26.18 trade, basically looking for that break of structure, followed by a 618 retracement in the belief, or in the concept being that the market will continue to trend and will move down lower. So keep an eye out on that double top. We've been kind of eyeballing this for a long time. Those of you who've been in Syndicate know that we've taken a couple of shots here to try and short Canada with no luck. So this may be a pretty good opportunity for us. And then the other thing I had on here was New Zealand dollar. Same thing, same setup here with New Zealand dollar. So double bottom coming in. We need to see the market violate the highs and then pull back down into that 618 retracement. Now, keep in mind, you also have here a potential shorting opportunity, because if this market rolls back up into this previous resistance level at 76.36, you're going to be able to short this market. You short here, stops above here, in anticipation that the market will return into trend. Now, guys, take a look at it. Betting on the trend is never a bad thing to do, and this certainly looks as though we've certainly been, since 2014, the back half of 2014, fallen from 88.25s to, well, now sitting around 74 or 75.62s. But you decide whether you want to take that, you want to wait for the break and look for the retracement to trade really at a reversal type of trade, or if you want to short here at 76.37 and look for that trend continuation. I'm going to be watching this into the early part of next week and trying to make my decision as to which way I'm going to go, and it'll depend largely on what happens on the lower time frame. But that's basically where I'm at with that. So there's a couple of things for you to look at. I don't like these videos to get too long, but I want you to kind of feel like you learned something every single time you watch a video. So do me a favor, leave me a comment underneath this video. Tell me what you thought. And don't forget to share this with your friends. And also don't forget to subscribe to the YouTube page, and also subscribe to the Forex Market Preview video. That way, no matter where you are, you can get it via email, because I send it out every single week. So until next time, guys, good luck and good trading. I'll talk to you soon.